Started here. I just want to say, first of all, thank you for your time today. I'm using this mic just to kind of amplify the sound, again, because we're in a large room. So you guys can hear me okay? Thumbs up? Okay, great. So just a little bit of background on me, first of all. I have been in real estate for 25 years. It's a long time. And one of the things I've learned is in this business, we're always learning new things, and that's good. That's good. So when it comes to taxes and what we're about to talk about today, this is really important, not just for new folks in real estate, but some of our seasoned folks in real estate who maybe up until this point really haven't done a lot with their P&L and don't understand like the basics of it. You'd be surprised. I talk to folks every day, and sometimes it's like they had someone else doing it, right? And so it's still important. Gary Keller tells us we need to know our business, right? In order to run a business, we need to know our business. And so one of the major things I think about is we are running a business, right? And if you're on Zoom, I would love it if you interacted every now and then, either in the chat, but I would really love it if every now and then you unmuted and you shared something with us or you have a question. Amber's gonna help me monitor that because I'm not gonna turn my back too much. I'm going to try to stay facing forward here, with either a chat or an unmute, how many years of business have you been in the business? If everyone could share that real quick so we can see that come through. And of course, I can't see the chat.
I'll start 18 years. I'll read your chat for you, Eli. Okay. So I've started in 2003. What about awesome. You, Gina? 5. She's got 5.
Okay, great.
7 months. We got Jennifer in the room with 7 months. Jenny Theis, almost 3 years. Has it been 3 years already? Wow.
Time flies.
Faye, 31 years.
Awesome. Awesome. 31. That's amazing.
Faye wins for the longest in real estate.
Yes, yeah, because I got 25, 26 almost, but 31, that's amazing. I'm glad to have you here. David, 7 months. Johnny?
14 years.
14 years, and those two folks in the room here, two extraordinary gentlemen. And, you know, again, like I said, it's one of those things, right, where we really don't realize, no one's ever really taught us, unless you're in the right circles, that this is a business. We're not just selling real estate, right? There's so much more to it, and knowing this piece is so important. So I'm gonna dive right into the material, and I want you to feel free to ask questions. I'm not a CPA, just for clarification one more time. I am not a CPA. I was licensed CTEC tax preparer for many years. I'm not anymore. And so that's why I'm teaching a very basic entry level, and I want you to ask questions. This is what this is about, is asking questions. If I don't have the answer, because I don't have all the answers, we will find out for you or get you a resource or a tool so you can find the answer, okay? And so as we get started, the very first thing I kind of labeled this class selling real estate and paying taxes, because we talk about, as we're getting like into the business, we talk about the fun part, the kind of sexy part where it's like, I'm gonna sell, you know, $10 million in homes, and this is the commission I wanna make, and it's exciting, it's fun, and there's still taxes to pay on that income, right? And so we're gonna dive into that, and we need to make sure we're looking at both. So as we get started, so I always like to start with this conversation first, okay? And I'm trying to figure this whole thing out real quick, Amber, to where I have the chat and I can still see the screen. Okay, so let's start with this. No longer a W-2 employee. So let's talk about that for a second. So again, unmute yourself or chat, and Amber will let me know you're there. And in the room, let me know. So when you were a W-2 employee, who paid the taxes? You're a W-2 employee.
The employer cut out of your check.
The employer pays some of your taxes.
Okay, yeah, the employer paid some of your taxes, that's correct. And then of course you paid some of your taxes, right? And here's the thing that I think most of us forget about. If you made, let's say you got a job at XYZ company and you made $50,000 a year, that was your salary, right? Did you take home $50,000 a year?
No.
No, right? You don't take home 50,000. You take home 50,000 a year minus your basic tax rate. So I'll throw some names out there. FICA, FUTA tax, which is like Medicare, Social Security. That's what those are. We won't dive into that today. This is a basic class. But that's 7.65%. Okay, I think I got that right, or 7.35%. And you're paying that half, and then your employer's paying the other half, which makes it 15.3% total. But when you're a W-2 employee, you pay half, your employer pays half into those two things. And this is really the big part of our discussion today, is this self-employment tax that we're gonna have. So what were they and how much were they? I just went into that real quick there and shared that with you. Are there any questions on that, right? You had a $50,000 a year salary, but you didn't take home $50,000 a year, right?
Right.
Maybe you took home, someone guess, what do you think you took home?
38.
38, 37, anybody in the chat have a guess? Someone's in the weight room. Anybody else have a guess? It's somewhere around there, depends, and that's just it. In this discussion we're having, there is no cut and dry way, because everybody's tax situation is different, right? Because remember, when you started work, what's the form you fill out that you start for work for deductions?
W4.
A W-4, a W-9 for self-employed, a W-4 for employee. And when you do that in the past, now the new W-4 form is so confusing. And the old one though, you would put how many dependents you have or exemptions, and then they would determine how much tax to withhold from your checks. I mean, when I was working with my dad, we would have people come and put 99. Now, no one has 99 exemptions. What they were in essence saying, don't take out any taxes, okay? And that worked if, number one, they maybe didn't have enough income to create a big tax bill. Number two, they had multiple dependents who gave them credits to pay the tax bill, right? So there's all kinds of variables. So that's the trick. We're not going to talk about all that in depth. We're going to instead talk about the other stuff, okay? So now you work for yourself and you get to pay all your taxes, because back then the employer, they took the taxes out of your checks and on a quarterly basis sent those funds into the IRS or the state of California, okay? That's what they did. And I'm going to change this because this is, okay, that's better. And so they would take that money and send it out on your behalf. Now, as a self-employed person, you get to track and plan for your taxes. And that's key, especially if you're brand new in real estate. You may think to yourself, okay, I'm going to sell that house. I'm going to make a $10,000 commission. My check might be $6,000 or whatever it might be based on your split with the brokers, right? And then that's it, that's my money. But it's not. That money still needs, you still have to pay taxes on that money. So we're going to dive into that today. So, and before I get moving on a little further here, are there any questions about what I've said so far?
No.
Please don't be shy. Questions? Any questions online? Okay. All right, here we go. So tax deductions are cut and dry, right? All right, let me ask you a question to answer this. So you, for example, we're in real estate, so we had two, let's say three of us, go look at the same listing, pull the comps, and come back to the seller. Do you think it is likely or unlikely we'd have the exact same evaluation? Unlikely, right? Yeah. What, online, you think we have the same evaluation? Probably not, right? And that's because it's subjective to reviewing the data and our perspective of the data, right? The same thing occurs with an appraisal. You can have 3 appraisers come out and get 3 different values. And I can tell you story after story about that one right there, because I talk to agents in the office all the time. And this last week, someone said, I had a house appraised, it was 40,000 short. We requested a second appraisal and it came in at value. How does that happen? You ever think about that? Okay, or let's say you take your car to the mechanic. You take them to this mechanic, they're going to quote you an estimate, and you go over here, the estimate's different, right? It is exactly the same with taxes, and that's the hardest part for us, right? As the taxpayer, is, okay, what do I write off? What do I deduct? How much are my taxes? And there is no cut and dry answer. So I apologize that today, when we end, you're gonna have a lot of great information. You're gonna have some great tools to access. You're gonna have some great questions to ask your tax professional or your CPA. But I can tell you this, you're not gonna know the cut and dry answer because there isn't one. It's subjective, okay? And so, so guess what the answer was, of course? It's no, they're not the same. They're not cut and dry in any way. Does that make sense to everybody? That makes sense in the room? Okay, online, everybody's good? All right. All right, so let's dive into this. And I think we're only doing an hour, correct, Amber? 1 hour? Yes.
Correct, yes.
Okay, cool. All right, so I'm gonna dive straight in, and then I want you guys to feel free to ask questions, okay? So what type of expenses can we deduct? So let's talk about the basic items first, just really fast. And here's what happens. You make this income, and there's a cost to make that income. And those are called deductions or expenses, okay? And so I want to chat about them. So why don't we name a few on the chat as well? What's a basic deduction for us as real estate professionals? An expense that will incur.
Advertising.
Advertising. Great. What else?
Gotta come off mute, you guys. Any ideas on deductions?
Come on, let's do this together. This is how, I mean, really it's gonna sit in if we talk about it.
Supplies.
Supplies, okay? What else?
Computers, any equipment you're buying?
Yeah, computers,
Domain
equipment.
name.
What was that?
Domain
Marketing.
name.
Marketing, yeah, marketing.
Office space,
Office space. Absolutely.
computer software.
Computer software,
Jennifer says your auto.
auto, that's right, your car, your vehicle that you drive clients to show houses all over the place. What else? Licensing fees, association fees, MLS fees, right?
Travel.
Travel.
When we can.
Yes, when we're able to do that. Education, trainings, right? If I charge you $100 for this class today, it would be deductible. But I'm not. We're not.
Because he's
Yeah,
super
we're not.
cool.
Right? Awesome. So, those are the kinds of things that are the basic stuff, right? I'm going to chat with you about some stuff that maybe you don't, or, maybe you do or don't know about. So the auto deduction. And I think, Amber, I sent you a link on the auto deduction. You can put it in the chat. And I'll share that with you guys on an email as well. We're not going to open it up. I'm going to talk about it for a second. And I want to be able to answer your questions on it, basic questions. And this is like in the beginning when I said, I'm not a CPA, I want to give you tools to talk to your CPA, your tax preparer, to ask the questions, to start thinking about what you can deduct, right? Because the more you deduct, naturally, the less your taxes are. At the same time, we want a profitable business, right? Who doesn't want a profitable business? Raise your hand if you don't want a profitable business. Anybody raising their hand in the chat, Amber, that they don't want a profitable business?
Nope, no hands raised over here.
Okay, well, guess what? By not raising your hand, you know what you just raised your hand to? Paying more taxes. So raise your hand if you want to pay more taxes. I know it sounds crazy.
I don't want to do that either.
Okay, so there's a balance, there's a counterbalance to this, right? We want to deduct what we can, and at the same time, Gary Keller always says, it's not about your gross commissions, your GCI, it's about what you kept for you and your family to build your dreams and your legacy, right? And part of that is not giving everything to the taxes either. We want to give as little to taxes as possible and still keep as much as possible. And those are actually kind of in contradiction in some ways. On the very basic level, if you have no profit, you have no taxes, you won, but you also have no profit. So that's not a win, right? If you have a ton of income and you didn't tax shelter that income, now you have a bunch of taxes you're giving to Uncle Sam, right? And that's kind of not a win either. So finding that right balance, that's the key, right? That's what you want to find. And that's the questions and stuff, the information we're giving you today, so you can go and ask your tax preparer, you can ask your CPA, you can have these conversations, right? So let's go over auto mileage versus actual, okay? So, did you know, okay, let's see if you know this. Pop quiz. Did you know, okay, pop quiz is this. Are you supposed to track your mileage no matter what you deduct? So, in the IRS code, it says you can either do mileage or actual cost. Actual cost is your gas receipts, your insurance. Actual cost is the cost of repairs and maintenance to your vehicle, right? Actual cost is, there's this thing called depreciation we're not going to get into today, it's too complex, but there's depreciation of your vehicle, that's actual cost. And then you have mileage, and I know that one of the links I sent you, Amber, has the auto stuff, it has the mileage in there. Okay, now, some people say, I just want to track the miles and just be done with it, that's easy, right? You track your miles. And I'm going to talk about that in a sec, but if you decide to go actual and you don't do miles, do you still have to track your miles? Yes?
Would you have to track it because you want to break out a percentage of what's business use and what's personal use?
Come up here and teach the class. Okay, so David just said that you have to track them so you can determine what's personal use versus business use. And that's exactly where it was going, so thank you. Regardless if you're doing mileage or actual cost, you still need to track your miles. Because the IRS has no way to know what percentage of those miles were business versus professional. And let's say, for example, and this is a mistake I see a lot of people make, and again, your CPA may do this and say, go ahead and do that. That's your CPA's call. I'm not your CPA. But I will tell you what I've read and what I know, and we have the link so you can read it yourself, is this. If your actual cost of insurance is $200 a month, and that's $2,400 a year, you cannot deduct $2,400 for insurance unless you use that vehicle 100% of the time for business. Okay? Okay, is there any questions on that little piece? Because I know a lot of people go, huh, wait, that doesn't make sense. So if you use it 100% of the time for business, you can deduct 100% of the cost to have that vehicle, right? And the expense with it. But did you go to the grocery store to get groceries for dinner on the way home? Did you have people, your family in the car just to go see a movie one weekend? Do you use your vehicle for personal things is the question. And by show of hands, who uses their work vehicle for personal things?
I do.
Yeah, I don't know if they're raising their hands up there, but we all do. I mean, unless you have two vehicles, right? And even then, right? Even if you had two vehicles, because I know some friends that have two vehicles and their spouse has two vehicles and they have extra vehicles, and he says, I'm on my way to the office and I go run to Home Depot for something for the house, I'm no longer doing business, right? So the IRS, they know this. They know there's tons of gray area. This is one of those deductions that has the most gray area in it. It's one of them, there's like 5. But there's tons, but there's 5 that are like really high on the scale, and this is one of them. So let me give you some ideas of how to track your mileage. Amber, I sent you some links. There's this
I've
app
posted
called,
those in the link. They're in the chat for you guys to access.
Thank you. So one of them is Mile IQ. Mile IQ is a little app you put on your phone, you register your vehicle, and whenever you're driving and you stop somewhere, the GPS tracking in your phone talks to Mile IQ and says, hey, you stopped, you finished a drive, was this business or personal? And you get to swipe, like left for business, right for personal, or something like that. I don't know which one's which. But you get to swipe, and you get to make a note in there, oh, I met Eli at the office for a one-on-one consult for my business, and that was the drive I took, right? Now, you can also, if you don't like apps and you're not tech savvy, you can go to Office Depot, and you can get a mileage log approved by the IRS. They sell them. They're little pocket-sized ones like that. You keep it in the car, you make a little note, you do your odometer reading, start and end. There's some rules around mileage. So when I was doing the tax prep with my dad, because I would do it for him in the evenings and weekends when he had overflow appointments, I remember people walking in and going, well, I said, well, you want to do mileage or actual this year? And they said, well, I'll do miles. I'm going to tell you something about that too. You can't just arbitrarily change it. But I'm going to do miles this year. And yeah, okay, so how many miles are we putting? and they're there just kind of going, I think I wrote maybe 2,000 a month, so let's go with 24,000 miles. Now, I'm okay with it. The tax preparer is okay with taking that number from you, but in an audit, God forbid any of you ever have an audit. I've been to a few with clients. Zero fun, teeny tiny room, on purpose, by the way, and your back is against the wall, the table's right here, and the auditor's right there. It's a little like, I don't know, 7 by 10 room. It's small. And they're gonna say, great, David, let me see that mileage log you used to determine the 24,000 miles. You have that with you? Oh, you don't? Well, how do we know how many miles you drove? Did you know that it says in the IRS, whatever, the code or whatever, that you're supposed to have that log? They sell it at all the office supplies. It's online, it's on our website. You didn't know that? And you just stare at them, they stare at you, and they get to choose what mileage they want to accept on your behalf during that audit. So be very careful. One of the things in our business, especially, we're all over the place in our vehicles. Track your miles. Now, Intuit, which is also QuickBooks, QuickBooks has an app that also does the mileage tracking for you, and it goes into your QuickBooks account if you have a QuickBooks account. There's lots of software out there that you can use, and I'll probably be naming some of them. QuickBooks is a little more complex, but it's really not that hard, and they have an online version now that's even simpler. They've really come a long way, so you can have it on your phone, on an app, and then the mileage tracker's on there, okay? So let's do a quick example. Anybody online want to kind of help me with this real quick? I hope so. I'm hoping someone will. Amber, listen, we get someone. I'm going to ask you some quick questions. Is there anybody willing to come off mute online? Come on. I don't mind holding on for a second. I need some help. Help me. No one ever, no one's
All right, I'll play along with you. I see Janet has the baby, or I would call her out.
all right, okay. All right, so let's just pretend for a second. I go, okay, how many miles, let's see, how many times did you show houses this week?
How many times did I'm a very busy agent? I showed 10 houses this week.
10 houses, so that's probably 2 trips, maybe 3 tops, showing 3 to 5 houses each time.
Mm-hmm.
Okay, and were they in Elk Grove, or did you go like to Wilton?
Most of them were Elk Grove. I went twice out to Roseville.
Okay, Roseville, okay. So based on that, what do you think your mileage was based on that? Just kind of so everybody can visualize 10 houses, went to Roseville, came back, did some showing in Elk Grove.
Well, it's about 10 miles and then drive around, I don't know, maybe 20 miles for the Roseville trip, back and forth. I don't know.
No, right? It's a little tricky. And this is, okay, thank you. That's all I needed actually. The point is, it's really hard to figure out after the fact. It's really hard. I mean, I think about the things I did this week and I think, okay, where did I drive? What did I do? That's why I want to tell you, track it every day. In that moment, it takes like 30 seconds to track it when you're done at the car. When you finish your drive, you're about to get off. If you're running late to your appointment, well, that I understand. I've done that a few times. And try to do it right when you get back because it's going to be really hard to remember. Yes, sir.
Do you have to track which client you took on those days?
Great question. So Johnny asked if you have to track what client you took on those days. So the IRS asks for a description of the business that you conducted. So a lot of times what I will do is showings, David, Rosemont area. Johnny, Coffee at Pete's, consult. Just shoot super short that the IRS understands that you know who you're meeting with. If they ever had to check on it, which they don't, they just decide if it's enough data or not. But it does require a description, an odometer reading, not just the number of miles. Now, technically, if you get in front of an IRS auditor who wants to be a brat, and sometimes they do, they won't just take 10 miles, 6 miles, 5 miles. They want your actual odometer reading, and that's tough, right? So if you ever go get one of those little booklets at Staples or Office Depot, look at it and you'll see what I'm talking about. So next time you're in the office supply store, look and see what the information that they're asking you for, so you'll know. Because all of that information is available on the apps, but you have to input your odometer reading, you have to input the notes, David, Rosemont showing homes. You have to do all that stuff in the app, okay? Yeah, so great question. Yeah.
Is the drive back also count, or is it only the drive to?
So David's asking if the drive back counts, and yes, it does, okay? There's this rule about your last drive of the night that I'm not gonna dive in. What I want you to do though is just track every drive and just track the drive there and back. And if you do that, you're doing more than 80% of the people out there.
So we can do total miles, and like I left my house, so was this odometer reading, and then I came back 4 hours later, total miles 180. I don't have to track every point to point, house to house, right?
Okay, so
Those are the total miles for the time I started to the time I got back.
So Johnny's question for online is, does he have to track every little drive, or can he just do the odometer reading in the morning, the odometer reading at night? You can do that, and if you get an auditor that wants the details of the day, you're gonna start sweating a little bit because you won't have them. So IRS said on the website, you can look it up, that you should track every time your vehicle moves, essentially. That's what they want you, and it's really not that tedious. It sounds tedious, but if you have the app, it literally alerts you, you just finished driving, where'd you go? It's pretty quick. It's about adding another minute or two to each end of each appointment, the beginning of each appointment. Make sense? I know. Now, a lot of people don't do it, and if you never get an audit, it's not gonna matter, right? But if we're preparing for, we wanna be prepared to do it right, then it would be every single drive. Because you may go to an education thing and then show a client, and then in the middle you went and got lunch. Which lunch, is that deductible if you drive to eat lunch? Well, that depends. Are you driving to meet a client? Or are you driving just for you to eat lunch by yourself? So the IRS is trying to determine personal versus business, right? And you, again, ask your CPA or your tax professional, because as we stated in the beginning, the appraisal thing with its different perspectives, I guarantee that there will be different perspectives on this. So I'm just sharing with you what I've learned and what I've seen happen. And I've been to some audits, what the auditors have asked. I was there, so I remember very clearly when my client was kind of squirming in the seat because he never wanted to do mileage log. He had like 80,000 miles every year, and he was having trouble explaining it to the auditor. The auditor cut him all in half just to be safe. That's significant, okay? And his tax bill went up quite a bit. Any questions on that? Okay, business use of home, real fast. If you have a home office, talk to your tax guy or girl and your CPA and ask them, hey, does this qualify? There's qualifications for a work at home. Some people say, I work at my kitchen table. Well, part of what the IRS asks on the actual form is, what's the area of space that you work in? Is it 100 square feet? Is it 200 square feet? And if you're at the kitchen table and one day on the counter and one day over there, you and your CPA or tax preparer have to decide what's the square footage we need to use. Now, does anybody know why they asked the square footage? David.
Well, up to 25% of your payment for your living expenses is taxable. I mean, it's a write-off or, and then what they do is they compare the percentage of square footage to payment and then they.
Exactly, he got it exactly right, which is they want to take a percentage of use of your home. So easy example for you guys. You have 1,000 square foot home. You have 100 square foot office. That's 10%, right?
Yes.
10%. That means you get to deduct 10% of your utility bills, 10% of your mortgage or rent, which only the interest and taxes portion of your mortgage, by the way, not the principal reduction. But your tax preparer will know those details. You just need the percentages, and then you're going to give them your bills for all year for SMUD, your bills all year for PG&E, your bills all year for Comcast. You're going to give them all those numbers. They're going to plug them in. But the only way to know what percentage is to know the percentage of use of the home. That's how they apply those numbers. A lot of people don't even know about that deduction, and if they do, many times they're doing it wrong. Now, there is a simplified method on the form, which again, talk to your tax person about if you can use a simplified method. It basically estimates based on how much income you earn and gives you a number that it calculates it. So it's done in the background. Okay. Any questions on that?
The rule about
Yeah.
office use, like does that, let's say that room, does that room have to be strictly used for that purpose, or if it's used for other purposes as well? Will they have an issue with that?
So David asked if the room that you're using for business is used for other purposes, is that okay? That is a discussion for you and your tax person, because there's a lot of questions that I would ask you. You know, like, well, how often, what is it you're doing, that kind of thing. But what I found most tax preparers, CPAs do is they just take that number, even as long as you use it for a majority of business, they'll just use it, usually. So, okay, anything with your logo? I want to talk about this, I think it's important. So if you're gonna do a gift for client, does anybody know the online, let's do online here for a second. Does anybody online know what you can deduct for a gift for your clients on Zoom?
And throw it in the chat, guys, if you don't want to come off mute.
Is it $50?
Janet says 50.
I don't know.
Good guess,
Okay.
Janet.
Thank you, Janet, for that. I appreciate it. Anybody else?
Is it like $25?
It is. It's $25. So one of the things that I did is, my team did was, we were giving gifts, like if you go get, I'm gonna get a bottle of wine, I'm gonna get some like cheese and different things and put it in a pretty basket. It's gonna cost me 120 bucks. Well, you can only deduct $25 of that unless you put your logo all over it. The second you put your logo on it, talk to your tax person, your CPA, it becomes a marketing piece. Advertising and marketing is 100% deductible. So how did I learn this? Well, I learned it from my dad, and the Cutco guy was in here one day teaching a class about, or presenting his Cutco stuff or get closing gifts. And he brought it back. I'm like, that's true. So if you bought a Cutco knife and it has your logo on it, that $100 and whatever knife is now fully deductible under marketing and advertising, and it's a gift for your client. Yes, ma'am.
So I just bought $16 tins of
Yep.
See's candy.
Yep.
And I just put my business card on it.
Okay.
Does that count as my logo? But it doesn't matter because it was only $16.
Yeah, you're correct. So her question was, she bought some tins and put her business card on them. You taped it, or yeah. And is that deduct? So pretend it was an $80 thing, right? And you did the same thing. Again, that's that gray area where, yeah, I would say yes, it is. And I would still check with your CPA and tax preparer, because in the end, you and your CPA or your tax preparer have to defend it in front of an auditor. And they need to make that decision what they're comfortable with. By the way, I know quite a few CPAs, and I can tell you, some are comfortable with things and some are not. Right? It's a comfort level because there's so much gray area. In fact, if you go to the websites, if you just Google tax deductions for a real estate business, you're going to see tons of paragraphs that say, well, this is a gray area. Well, this is a gray area. It's all over the place. So if you want to be certain 100% though, you would make it a permanent thing, kind of more of a sticker versus a card. But I think it would be. And again, I'm not your tax preparer. Disclaimer, yeah.
It's gonna be challenging to prove that, though. I mean, the gift is already given to the client.
Totally.
The client's unwrapped it and thrown it away.
Yeah.
I mean, the auditor doesn't even know who the client received it is.
Totally
How can
true.
you show that it had a logo or not?
That's very true. Johnny made a good point. You know, once you give the gift, it's kind of hard. How can it be tracked? How can anybody see that? Well, very true, right? And these auditors, somehow they find out things. I don't know how. I mean, they have investigative services. I know they do, when they want to audit someone, right? So were you gonna say something, Amber?
No, I was just saying they're like super secret spies when they want to be. They get all kinds of information that you'd have no idea about.
So, you know, again, you're right, 100%. And it's one of those things where we've got to be careful. So let's go to the next item real quick, which is professional attire. I can't tell you how many times I had arguments with people, and not bad arguments, well, more of a discussion, we'll call it, on, hey, I bought this nice suit, you know, because I'm a professional and I need suits and shoes. So if you go to the IRS website, it very clearly states, if it's a tire that is not required as part of work and can be worn in other venues, not deductible. Not deductible. So I'm glad you bought the suit and the nice shoes because you're gonna do a listing presentation, and at the same time, be very careful. Consult with your tax person because majority of it is not. Uniforms are. And what professions have uniforms? Right? Now, Johnny has a shirt with his logo on it. Does that count? Absolutely. Follow? So if you want your attire to be deductible, put logos on it, just like everything else, because then it becomes marketing, advertising, right? So those are tips you can use. I want to really just get you thinking about stuff. We're going to go over an actual P&L here in about 2-3 minutes. So get ready for that. I'm going to give you an example of what a P&L looks like and the taxes. But I want to go through these. Meals and entertainment. So entertainment got completely changed and thrown out the window 2 years ago, I think it was, maybe 2 to 3 years ago. Entertainment's gone, and I don't know if you knew that, okay? And the hardest part about that is, so if you want to take me to the Kings game because you want my business, in the past, you could just say, hey, we're talking business, this is a client, I want their business, so I'm schmoozing them and taking them out. And that was acceptable for a long time. But as with most things, people started taking advantage, right? We're on a cruise, we're going to Hawaii, and I want to just invite Johnny, and we hang out for 1/2 of a day, or we're there for a week, and we deduct the whole week. And that's the trip, right? So they got rid of entertainment unless they changed it back. I have not heard that, and I don't think they will. Yeah, they've been talking about it. They're gonna have to come up with some really stringent like guidelines for it because it's just too open. But meals are still deductible at what percentage? Does anybody know? Anybody online know, Amber?
50%?
50%, 50%.
The client's portion.
Yeah, 50% of the client's portion. Here's the key. You have to have someone there with you. So if I decide right now when we're done here to go get lunch all by my lonesome, not deductible. Now, talk to your tax person, because if you happen to be showing homes that I own and you go get lunch, if your tax person discerns or determines that's outside your tax home area, that's what that's called, then that can be tax deductible possible. Like if I go to an event in Austin, Texas, and I'm eating meals there with or without clients, that I'm too far from my home to go eat. The whole issue is, are you too far from home to eat? That's the first issue. Second issue is in the course of business. And so you want to have this conversation with your tax person. Because there's so many gray areas, but I want you to be aware, right? Be aware and be careful. And every time you get a receipt, we're going to talk about tracking here in a bit, you want to make a note. I was out with Johnny and we were talking about XYZ, and save that. Okay, save that, because the IRS likes proof, and if they see you're organized and they have proof, then a lot of times they will be like, oh, okay, let's move on, because you got it dialed in. They won't even dive in, but if they say, oh, that's really sloppy, I need to see everything now, pull out everything, I want to see it. That's exactly what they did to this one gentleman that we went with, because his stuff was just a mess. And we kept telling him, put it together, put it in folders, label it, write notes. He just couldn't get to it. And so he said, I can't get to it. So we got to the audit, it was pretty bad. And it took way longer than another audit we were at, which was considerably shorter because the person had some organization. So vehicle use, we've already kind of talked about that, so we'll dive back into that. I kind of jumped into that last slide. So let's get going because I want to do the actual P&L with you guys. So ways to track and maintain records. There's tons of ways. The first one is just keeping those receipts, write a note. One of the things I would do, I would write a note on the receipts and then I would keep them in folders or envelopes. And then I'm going to go through the whole thing here. So weekly Sunday evening reviews was my date. So you're a business owner. You got to pick a time and a day for you to review receipts once a week. So, oh, I had 5 meals this week. What's the total? They were all with clients. I'll split that in half. That's my number, right? 50% deductible, right? Does that make sense? Or this week I bought 2 lock boxes and a panel, sign panel. Those receipts go in there, right? And you save those, and every week what I would do is I would tape them to a piece of paper and scan them. Because if anybody knows, the little carbon heated paper receipts, they fade. And you have nothing, you have no information. Any questions on that? There's tons of ways to do it. Another way is to go through your bank statement, verify your receipts, because you got, I don't know, who still pays for stuff with cash instead of a card? I do it sometimes.
I do sometimes, and then something that happened to me was I was very good at paper, and then I had a flood in my garage and all of my paper was destroyed. So
Yeah.
something I started doing was, like Eli suggested, scanning it. But I also made a Google folder, so then I have it in electronic format for
Good.
fire, water damage, theft, so.
No, very good. That's really good. And then, you have a question, John?
Is it a good time?
Yes.
Okay.
Yeah.
Just because you mentioned you've been audits and so forth, and you
Yeah.
just talked about receipts.
Mhm.
And you're absolutely right, they do fade.
Yeah.
And I do collect mine in a big envelope, and I have them there, saving by year. I handwrite on the top, just real estate, office supply, the amount is spent and the date, and the rest will fade by the end of the year. Will that be sufficient? With a faded receipt, but a handwritten in ink, blurb
So his question is, he would handwrite on the carbon receipt,
on the receipt, the
And
date.
the date, the
Real
details,
estate.
kind of some basic stuff, right?
Yes, yeah.
And then the rest of the receipt would fade, but the handwritten would stay. So I'm gonna answer it with the story,
Okay.
okay? So someone, we were in an audit, okay? And one of these clients, he had a Walmart receipt. And in the Walmart receipt, he circled like 4 things, right? That were real estate related. And then in another Walmart receipt, he didn't circle anything. And he just put a note that it was for his business, like simple stuff like you're talking about, just a simple note at the top. And the auditor said, well, on this receipt, you circle nothing, and on this receipt, you circle some things. So how do I know that on this receipt, if this is all real estate or not? See, the issue is they want to see what you're buying if they audit you. If they don't audit you, again, it's irrelevant. So an example, if you wrote on a receipt from Walmart, just like you said, and you bought folders, paper, pens, things for your business, clipboards, but you also bought another $50 worth of bread, milk, toothpaste, how would the auditor know? They wouldn't know, and therefore they will likely question you or question it, especially if they see it over and over as a pattern. They're looking for patterns. So
What do you recommend? We
scan it. No, scan it. Soon as you, that's why the weekly Sunday evening meeting is so important. I mean, you can come in and scan those in the morning real quick, put them on a Google Drive like Amber suggested, which is amazing, and just put them by year. So I got folders, it's 2021 expenses. In that folder, I create meals, I create rent, I create associations and professional dues. And in those, you start piling them in there, and then you've got a collection going, right? And the cool part is you don't have to keep the messy receipts and envelopes anymore. So that's a positive, right?
Scan it with your phone.
You scan it with your phone. There's apps, PDF apps that scan it with your phone. So just whatever is good for you. That, see, the key here is that you actually do it, right? So whatever's easier for you. One person might like folders and envelopes, and another person's like, nope, I'm scanning in Google Drive. And the key, what I want to share with you is, for my heart is, whatever's going to help you do it, do that. Right? Even if it's a spreadsheet, it can be anything you want. Some people say, I can't use QuickBooks, it's too complicated, I'm gonna use an Excel spreadsheet. Great, do that, because you're gonna do it, right? That's the key. So I would also suggest, get an accountability partner once a month, go over your P&Ls together so you can say, it's not about, oh man, look, you didn't make any money, or oh, I made a lot of money. It's not even about that. It's actually helping us get it done so we can see it. Like, did you actually do it, David? Let me see. And you're like, I didn't do it this month. So I got to do that next month. And so it just kind of keeps us motivated to get it done. And then if you want, you can talk about it with each other,
Something on that, Eli, is, when you're in coaching and we review that, what I notice is when people are doing a P&L and watching their money, they actually are more profitable most of the time because they're holding their money accountable and they're starting to see it go. So that routine of getting in and looking at your numbers every week to every month you're gonna know right away if you're not profitable or profitable, and you can make your adjustments versus waiting till at the end of the year. And then you're like, oh my gosh, either I made a lot of money and I owe a whole bunch of taxes, or I didn't make as much as I thought I did. And neither one of those conversations are fun. So that weekly accountability and monthly review is super important.
Absolutely. So I'm gonna start sharing now an actual spreadsheet. We're gonna walk through together. Thank you, Amber, for that. It's a big deal. It helps us to see what needs to happen, right? All right, thank you. Okay, so let's run through this real quick. This is probably the funnest part because you get to see it actually happen. And so here's what I'm gonna do. How many people do we have in the class, Amber? More or less?
About 15.
15 online and then 3 in here. I want everybody to come up with one line item and then I'm gonna put it in. So let's start with gross income. We're gonna call on you. So Amber, you would call on each person. And honestly, the number doesn't matter. It's just going through the exercise, okay? So I'll start in the room here first. So Marcy, how much gross income do we make this year? This is for fun.
100,000.
100,000. Okay, we made $100,000 of income. David, how much were your SAR dues? Just a guess. 1,200. What was your name?
Patsy,
Patsy. Patsy, how much was your MLS dues for the year?
400.
400. Okay. Amber, pick someone.
All right, Janet, you're up next.
Okay.
Time pass.
I'd have to take a guess because I've never bought them, but 300?
Okay, 300. Perfect. Next.
All right, Jennifer. Either
Signpost.
throw it in the chat or
I'll say 100.
$100. Signpost installation. Business cards.
business cards. Monica, I'm coming to you. Kristen, how about you?
She wrote 100, Monica wrote.
Oh, perfect. Thanks for watching the chat.
Thank you. Marketing and advertising. This one should be bigger, right? A little bit bigger. So who's
Yeah.
next?
Let's have some fun with this one. How much are you guys spending on marketing and advertising, Kristen? Big number. PC, 5,000.
5,000?
Oh, that's for the transaction coordinator fees. Tracy, thank you for that. We can skip down there and pop that in, Eli, 5,000.
Oh, there we go.
That's okay.
Marketing
Back
and
up to
advertising.
marketing and advertising. What are we gonna spend on marketing and advertising?
That's Facebook ads, print ads, mailers.
All right, Jenny Thies says 3,500.
3,500. All right. Meals.
And meals at 50%, because we can
Let's
only
see.
do the 50%.
If you take me to lunch once a week, right? Hopefully, take me to lunch once a week. We're going to spend what, 20, 30 bucks each time, times 52 weeks. At least
Yeah.
that, minimum.
Faye, what do you think? What are we spending on meals?
Can you hear me?
We can.
I'd say 3,500 for the year.
Awesome.
Okay.
3,500 for the year.
All right.
I
Now,
lost-
normally we take that in half, so I'm going to do 1,750. Okay.
Right. I lost my screen for some reason.
Oh,
Training and education. This is like classes you sign up for. If you go to Bold, you're all going to Bold, right? Everybody's going to Bold. You're going to go to local events that we put on here for training in the region. What are you spending?
Mary Lou, what are we spending for our education this year?
For education, I probably spend about, I do a lot of things videos that I watch for KW, but I'd say about, you mean for the year?
Yes,
Okay, for the year. I'd say about 250.
250. Yeah, in
Yeah.
2020, we didn't travel a lot.
Oh, for
Very true.
2020, okay.
Very true.
Maybe 100.
No,
Well, when you
250,
go
250.
and you're doing your training and education, think about family reunion, think about the big
Right.
conventions that you want to budget for, coming up that the world is going to open back up, I'd say I'm going to go with Tracy and go 101, 1,500.
You're
It's gonna be a
trying
little bit,
Gotcha.
Yeah.
Yeah.
Gifts for clients. So you're gonna close how many transactions? Let's call it 20, because I believe in you all. 20 units, at least. And you give every client something.
about $150 on average is what I would say is a gift.
So maybe, now remember, we can only do $25, right? Unless it has your
Mhm.
logo. And if it has your logo, where does it go?
The
Marketing and
rest of it's gonna
advertising.
go under marketing.
So let's do this. So 25 times 20 is 400 something. Let's call it $500, but let's go back up to marketing and advertising. Add that in, Amber. So we're gonna
Okay.
make this a cool $5,000 because we did logos on all our gifts. Okay, fuel cost.
How about Lisa Ward or Stella, if you guys want to answer one of these? Come off mute or type it in the chat. Anyone else want to chime in?
Fuel costs. So how many times you gas up a week? Twice? I was gassing up 3 to 4 times a week when I was crazy showing houses. And each time was $30, $35. Let's call it 40. So
Maybe
I would probably
5,000. So she's 5,000 on fuel
Yeah.
we got.
love it. Cell phone. Everybody pays what? 80 to 100, 50 to 100, depending on what you're paying. Okay, and this is one of those things. You deduct the entire thing. Is it 100% for business use?
I know most agents don't have a separate cell phone. They use
Yeah.
it for everything. So
If you have 2 phones, Patsy, then yes. You can say one's 100% business, the other one personal, right? But if you have one cell phone, just like one vehicle, the odds are you're getting a text from your brother, your uncle, your aunt, you're calling your cousin, you're doing other things, you're calling Fandango or whatever, you're doing you're doing things that are not business. So some CPAs will tell you, go ahead and deduct the whole thing, why not? That's your guys' call with your tax pro and your CPA. But I don't.
so say maybe we do, yeah, there we go. Office supplies, so paper clips, folders.
Folders, yep. Do we have anybody else on the list there?
Post-its. I think we've gotten great participation.
Awesome.
Guys, feel free to throw them out there.
So far, we're at $21,000 in expenses.
So would office supplies also include like laptops or computers, or would that be separate?
She asked if office supplies would include laptops or computers. So there's this thing, you gotta talk to your tax person, because equipment is depreciable. It depends on the cost. There's a lot of variables. Some of it is deducted. Most of it nowadays, we have this thing called, write this down. If you're curious and you'd like to know more about tax stuff, write down, what is a 179 deduction? And look it up. I mean, have fun with it. Even YouTube videos, 179 deduction. That's where you get to depreciate something and write off the entire thing. So there's a lot of, you're gonna find it, there's a lot of variables in there. So it's better to ask your tax person, right? What I want you to know is, great question, Patsy, bring the receipts for all of those and have that conversation when you sit down with them, right? I bought a laptop this year, I bought a brand new cell phone this year, whatever it is you bought that's equipment, I bought a printer for the house, bring that to your tax appointment, track that, right? And for P&L purposes, we'll put the entire amount here, but when it comes to tax, by the way, so when you go P&L, that's not your taxes being done. This is us tracking flow of money in and out of a business. When you go to do your tax prep, sure, you'll use your P&L to show your tax person, then they're gonna ask you questions about what I just did. Well, what kind of equipment is it? How much did it cost? Did you buy a $100,000 vehicle or was it a $50,000 vehicle? There's different rules for all that stuff and your professional will know that. The most important thing for you is to track it all so you know what you're spending on your business every month. because that's how you make good decisions, right? Of what to do with your business. And you can see gaps, you can see things that, oh man, I spent way too much on this. What's my return on investment? Am I getting business from this activity that I'm spending? And should I stop, right? So that's why we want, this is an entry level class. I could literally do a 3-hour class on this. I mean, simple. I mean, just to talk about all these little nuances. So today we got an hour, and I'm almost at the end of the hour. I'm watching the clock. Okay, so I'm gonna finish up the quick question.
700 is what Tracy said for office supplies, so we'll pop
Awesome.
that in there.
Yep, and I didn't see like office space, so I put 2 miscellaneous columns here. So if you have an office space you pay for, let's call $200 a month. That's $2,400 for rent, right? Okay, and then let's just look at this real quick so we can talk about it before we wrap up, because we're almost gonna wrap up, but I wanted to show you this, because this is really what it was about. But I needed to give you some context, right? Some background so you could kind of see this. Now, so we made 100 grand. We talked about in the very first part of the class, you don't keep 100 grand, right? We talked about that. So when you go to decide your business model, and we have an amazing business planning clinic that Keller Williams puts on, where we talk about how many units is that? How do I plan to get there? What are the activities to get there, right? And when you decide this number, watch at the bottom of this sheet that I'm about to show you what your actual take home is. You may change your number, okay? Now, every business is different, so the expenses will be different. So our total expenses right now are no, I did something wrong. Oh no, 24,000 right there, right? 24,000, which means we have a net profit or loss of 75, which is a profit, okay? And remember in the beginning, we talked about those taxes, okay? I'm bringing it all together now. Remember the taxes we talked about, that your employer pays half and you pay half? Well, here's the thing. The federal tax, you've always paid that. That never changed, even when you were working for someone. The thing is, this percentage I'm using, 18%, there are different tax brackets, and hear me loud and clear. If you have other streams of income, your spouse has income, your bracket can be anywhere from 12%, I think 10% or 12%, I forget what the bottom bracket is, all the way up to 34, 36%. So as I stated in the second slide, is all of this cut and dry? No. I mean, my spouse might make 100 grand and your spouse might make 300 grand, right? We're gonna be in a different bracket. So this percentage number is different. But for general planning purposes, I like to use this number because I found it to be fairly accurate over most brackets, because we're adding in the 15% as well right here. You see that? Everybody see the 15%? I forget, you guys are online.
Yes, yeah,
So
we can
there's
see
the
it.
15% right there, right? This whole piece, that's your self-employment tax that you're paying now. See how it's $11,528? These taxes are applied to that net income profit you made, and it's multiplied to get that number. And half of that, how much is half of that? 11,500, half of that's 6,002 something, right?
Mhm.
Your employer used to pay that at your W-2 job. Now David gets to pay that. Eli gets to pay that. Okay, so, and there are tons of other, again, another class for another day is how to protect some of this tax and pay less of it. There's tons of ways, but that's not what we're here for today. Here's what I want you to get from today. Your tax bill is about 25 grand on that 75 grand. If there was no protection in place, there was no strategizing with your tax person of where to put money, because there's tons of ways, tons of vehicles to take your money out and put it somewhere where it's not taxed. Okay, but generally speaking, if you did none of that and you made a $75,000 net, this is more or less what you pay in taxes. Now, for those of you that know the tax law pretty good, or you've heard things, there is a deduction that the new tax law changes 2 years ago, where they deduct 20% of this number. Okay, but we're not going to talk about that today. Just as a general rule, so if you're planning for 25 grand, you're safe. You have more than enough money, because there's still adjustments in here that would take me another hour to talk to you about. And we don't have that time. So generally speaking, what did you keep and take home at the bottom of this page?
50,000-ish.
So you made
About
100.
half of what you made.
Right. So you made 100. Your expenses were 25, your taxes were 25, you kept 50. This is the real number that you get to use for your family to go on vacations, pay the budget. Because remember, at a W-2 job, if you made 100 grand, you wouldn't take home 100 grand. You may take home 80, 85. But here's the thing. You also got to expense things that you got to use. So we got to keep that in mind. I guess what I want you to get out of this today, and the thing that's so important to me is, when you're making this money, you need to set aside some money immediately. Now, I want to leave you with this, and then we're going to do Q&A and we're going to close, okay? This is it. If you took this as a percentage of 25 grand of the total number, it's easy, right? What percentage is that?
25%.
25%. So here's what I want to suggest. Write this down. This is the nugget. This is the big nugget of the day. I've already given you lots of nuggets. Don't try to pretend. Okay? The nugget of the day is this. Whenever you get a check, I want you to take 20% of that check and put it into a savings account that you designate to pay your tax bill. Pretend like it does not belong to you at all. If you do that, you'll be pretty safe. Is there a guarantee? No, I'm not making any guarantees because I don't know your whole tax picture. It's not possible. Only your tax person knows that. Does that make sense? So what you're going to do is, if you take 20% of every check and you put it there, you know, I'm not touching that. And then you should take another 20% and put it into an expense account so you can run your business, right? And then you keep the 60 for you. Now, as an independent agent, that model kind of works. Gary Keller, the Millionaire Real Estate Agent, talks about 33% of expenses, right? 33% of cost of sales. It's 30, 30, 40 actually, but you get the idea. But that's for larger, as you get larger and grow, that's another class. That's not this class. This class is for newer agents, people who haven't learned the P&L and the basic stuff. And if you just do that 20% rule, because honestly, Patsy, if you had taken that 100 grand and you put 20% away the whole year, you would have 20 grand, almost enough to pay that bill. And as I mentioned, there's adjustments that haven't happened, so the bill's likely less, but for sure that at least, right? Any questions?
No, Tracy says, great advice, the 20%.
Thank you, Tracy. I wanted to get basic overview today. Go ahead, sorry, Amber.
Yeah, so I was just gonna say, you know, these are things that Eli and I would love to sit down with you guys, have consultations with your private business numbers of what you want to do, and then I can refer you to a CPA so you'll know where your guys' tax basis and stuff is. So would love to follow up with you guys on that.
Awesome. Yes, absolutely. Definitely do that, because if you don't have a coach, right, coaching you on this piece, it could come apart. You could go into 2022 to do your taxes for 2021, and the tax person says, okay, your tax bill is 25 grand, and you're going, what? I can't tell you how many times I've had people sit in front of me and go, what? What do you mean? And go, well, you didn't know? You have all this income and nobody's paid taxes on it yet, right? And here's what I want to show you. Let's say you're very frugal, because I actually talked to someone who was very frugal in their business. I mean, didn't spend hardly anything. Let's just pretend for a moment that you didn't do any marketing because you're just amazing and all kinds of people want to work with you all the time. Anyways, you really didn't do any meals because you ate at home every day. You went home from here, you went to eat lunch at home and you came back, right? You didn't use a transaction coordinator because you are amazing and can do it all, and you wanted to do that. So now your expense is only 12 grand, which means you got $87,000 of net income. Your tax bill is now 30 grand. You see that? So as you have less expenses, your tax bill does grow because it's a percentage. But keep that in mind. That's why the 20% rule is kind of nice. If you want to be extra safe, you can do a 30% rule. You can do whatever you would like to do. And then one last thing is, talk to your tax person about quarterly payments. They're actually called estimated tax payments, and they're done quarterly. It's not quarterly, it's like you have payroll. That's a whole different thing. There's also a quarterly estimated tax payment where you're paying in advance. So like, for example, the first quarter is about to end, January, February, March. In April, you would send an estimated tax payment based on your income and expenses that we just went through for January, February, and March, and send it to the IRS now. Which, in the past, the IRS never penalized the self-employed for paying their bill in tax time. They would just, it was good. Now they're starting to, people are getting penalties. So if you're not paying that as you go, you can get a small penalty from the IRS. So does that make sense, everybody? Any questions from anybody ever on the Zoom?
It says, is it one or the other for claiming miles or gas?
Oh, good. So yes, it's one or the other. And once, talk to your tax person, they're going to tell you, let's say I just bought a 2021 Honda Accord, and I decide this year I'm doing mileage. And then if another whole year passes, and I tell the guy, my tax person, hey, dude, I want to do actual costs this year. You can't do that. Once you've selected a method of reporting for your vehicle, it stays with the life of the vehicle until you get another vehicle, and then you get to pick again. But in both scenarios, Amber, I forgot who asked the question.
It was Tracy.
In both scenarios, you have to track miles with a log anyways. Even if you do miles or you do actual, you still track those miles.
Awesome. Any other questions, you guys?
Q&A, and we're done.
I know we've gone over on time, and so we really appreciate the time that you're spending with us this morning. Would love to hear any questions. Is it possible to get a recording? Yes, it is. I did record it. I will send it out to all of you guys.
Awesome.
If
Any
no
questions?
questions, how about 2 ahas? Something you learned today.
How much money that I should be putting aside every time I get a commission check?
Awesome. Yeah, super important, Janet. Thank you for sharing.
Thank you, Janet.
Jennifer, just ordered my mile tracker for my vehicle. Awesome job.
Good job.
Stella says, thank you so much. Great information. Amount you can give in gifts. She's been over gifting. Awesome
Put the
job.
logo on there. Put the logo on there.
Tracy learned the 15.3% self-employment tax. Sounds like they learned a lot, Eli. Good job.
Yay. Awesome. Awesome. So grateful to have you all with us today. Thank you so much. Let us know how Amber, I, or anybody under our servant leadership team can help your business grow. We want to do that. So
Thanks,
definitely.
Eli. Thank
You're
you.
very welcome. Thank you, Eli, so much for your time.
Thank
Bye,
you.
you guys. Have a great rest of your day. I'll send the
Bye.
follow-up email with the recording and all of that fun stuff.
Great. Awesome. Thank you.
You're welcome.
Bye. Thank you so much, Eli. Bye,
You're
everybody.
welcome. You're welcome.
Mhm.